I lost so much in trading until I found this truth, which became a game changer for me. Hello, everyone, this is Ageless. All right, kindly pay attention to some secrets which I'm about to reveal to you. So, if you've not subscribed to this YouTube channel, do that because after this video, trust me, you would have mastered the market. So now, what I'll be teaching you right now is fair value gaps. Now, there are what? There are there are weak fair value gaps, and they are what? Strong fair value gaps. So I will be just exposing between weak and strong fair value gaps. Then after that, I will go into the chart and I will also explain to you how you can take trades using all of these things that I'm about to teach to you, some strategies that will put you on the edge to profitability. So just stay with me and you will see it. So these are the things that most professionals in the industry will not reveal to you. But this very moment, I'm going to what? I'm going to reveal all of it to you and this um, trading strategies behind them. Now let's take a look at this. Strong fair value gaps. Now, what are strong fair value gaps? Now, a fair value gap is strong when you find it on the higher time frame. Yes, the higher time frame fair value gaps are stronger than the ones on the lower time frame because the higher time frames, that is where institutions, that is where they take that is where they place their trades, that is where they move the market. Okay, they don't come to the lower time frame to trade. Okay, so they pump money into the market on the higher time frame. So therefore, higher time frames are stronger than the lower time frame. So if higher time frames are stronger than the lower time frame, therefore the fair value gaps on the higher time frame are stronger than the ones on the lower time frame. So I will be what? Exposing some of this truth to you using charts and how you can capitalize on this whenever you are trading. Okay. Then after that, then we'll now move on to fair value gap that is overlapping with another PDRO array is a strong fair value gap. If a fair value gap is overlapping with a PD array, trust me, this is something that you should be trading from. Okay. So then after this, I will now move on to what? To this one too, which is fair value gaps that are in contest. Yes, if a fair value gap is a contest with another fair value gap, then it is a strong fair value gap. Most people don't understand what contest means, but notwithstanding, I'm going to what? Expose it to you. I'm going to reveal these secrets to you and how you can trade with them. Then the fair value gap that disrespects another what? Fair value gap. This one is also a game changer. Now let's go into it. Let's start with the first one now. Before we move on to the first one, I want to first of all establish some truths to you. Now, as you know that this is a fair value gap and it's a bullish fair value gap, right? This is also a fair value gap, but this is a bearish fair value gap. Then don't forget, I've also explained to you earlier on that fair value gaps are what? They are actually the leg, okay, that price we use to move to the next destination. And fair value gaps, they are magnets. And not just only that they are magnets, they are also what? Rockets. So fair value gaps, they magnetize price towards themselves. Then when price comes into them, they push price away. So if this is a liquidity point, okay, and this is a bullish fair value gap, and we want to get to this point, what do we need to get to this point is what? Fair value gap. So we will wait for price to what? Retrace back into this fair value gap, and then when price comes into this fair value gap has the energy to now what? Push price away to our destination. So when we wait patiently for price to get into this fair value gap, that is when we should start looking for an entry to then ride the market down or upward towards this draw on liquidity or this swing point, okay, or probably you can call it old high or whatever. Likewise, this same scenario also applies to a bearish fair value gap. Okay, if we are coming down, if we want to trade towards this low, right, this liquidity point, now a bearish fair value gap is formed on the higher time frame, right? We wait for price to retrace upward into the fair value gap. Then when price gets into the fair value gap, what will happen is that this fair value gap will push price downward to our liquidity point. Okay, now fair value gaps on the higher time frames are stronger. Now, just look at this is the scenario of what I just explained to you now. If we are going upwards to target this high, right? So this is the leg that we need to what? To push up. If we are going down to target this low, we want to start selling, we first of all wait for price to retrace up into this fair value gap. Then when this price comes into this fair value gap, then this fair value gap is a rocket. Okay, it pushes price away. It will push price down to our target. Okay, or our profit line, draw on liquidity. So that is that. Now let's first of all establish this truth again. The first part is that for you to know a stronger fair value gap, you understand, it must be on the higher time frames. Okay, higher time frames fair value gaps are stronger. I want you to pay attention to that. If you open up your charts, right, then you need to start your analysis from the higher time frame, which is the monthly time frame. Okay, so now, if there is a fair value gap on the monthly time frame, trust me, the fair value gap on the monthly time frame is stronger than any other fair value gaps on the lower time frame. But if there is no fair value gap on the monthly time frame, you move down to the weekly. If you find a fair value gap on the weekly time frame, now this weekly time frame fair value gap, which is even a bullish fair value gap as we are seeing on this case, will tell you the direction of what? Of the market. Okay, so the direction of the market is what? Bullish. Okay, now this weekly fair value gap is stronger than what? The fair value gap, every other fair value gaps on the lower time frame. Okay, likewise daily, the daily fair value gap is stronger than the 4 hour fair value gap. The 4 hour fair value gap is stronger than the 5 minutes, the 10 minutes, the 30 minutes, or probably the 1 hour fair value gap. So therefore, for me to now establish that now, higher time frame fair value gaps are stronger than the lower time frame fair value gap because institutions they play in the higher time frame. Now, fair value gap is the footprints of the institutions on the higher time frame. Okay, if the institution wants to move the market, right? Now they leave this footprint behind. The moment you see that okay, there is a fair value gap on this higher time frame, which is monthly, then it will tell you the direction of the institution because you have to be trading in line with the direction of what? Of those big boys, okay, that are moving the market. So they leave these footprints behind. So you have to use the fair value gap, right? You work on their footprint. You use this fair value gap to move in line as they what? As they keep pushing price upward. So higher time frame fair value gaps are stronger than the lower time frame fair value gap. You have to respect that. Now, how do you trade with this? Now, trust me, just stay on with me, and I'm going to review this secret on how to trade using what? Higher time frame fair value gap. Let's take a look at this now. When you open this chart and you discover that there is no fair value gap on the monthly, then you now move down to weekly. Now we just move down to weekly time frame now because we found a fair value gap on the weekly time frame, right? Now can you see there's a fair value gap here? This is where price is at the moment. This is where price is at the moment. Now let us mark out our fair value gap. When we mark out our fair value gap, we have this. Can you see it now? Weekly fair value gap. Now what is our target? Because price is moving upward, this is our target, this swing point. Okay, this swing point, or probably the liquidity area. Price moves towards what? Liquidity, where money is. Let's mark it out. Now look at it. Can you see it? It has been marked out. So we want to target this swing point because that is where price is what? Is heading towards. Okay, price is chasing after money. No, on a swing point, swing low, swing high, there are what? There is a lot of money there. So price navigates towards where money is. Now, how do we get to this point? All right, we need a fair value gap. Okay, we would be expecting that price will retrace down to this fair value gap. So when price comes to this fair value gap, then the fair value gap will now push it up, right, to our target. So we need this leg to get to this point. All right, now for this leg to push price towards this point, there has to be a retracement. Now, this high, there's a high here, there's a swing high here. So, because this price at this moment has taken out this high, the moment price takes out a high, it will retrace a bit. Okay, now that is what will eventually happen. Can you see the high here? This is the high here at this moment. Okay, now we want price to retrace back to the weekly fair value gap so that we can take an entry, then we now ride it towards the liquidity point. Now, this is what we are expecting price to do. Okay, it will retrace back downward because this weekly fair value gap is a strong magnet. It will definitely magnetize price towards itself, then it will push us up. Okay, when price just get into this weekly fair value gap, then you capitalize on it, you take advantage, then you ride it upward. Now, this is what is going to happen. Now, let's check it. Do you know that this is actually a weekly fair value time frame, right? Let's look at it again. Now, look at it. This is a weekly time frame, right? Now, this is where the price is, and this is a weekly fair value gap. If we open this chart on a daily time frame, that is a time frame that is lower than this what weekly, you will see that there is going to be what? There is going to be another fair value gap that is formed. This is daily time frame now, right? Can you see that this is a daily time frame? This is a daily time frame. Do look at that, our liquidity point that we drew out on the weekly time frame. Now, look at that, our fair value gap, weekly fair value gap that we spotted out. Now, look at where the price is now. Now, if you can take a note of this, you see that there is what? Another fair value gap that is formed on this daily time frame. This is a daily fair value gap, right? This is a daily fair value gap. So many of us would have been expecting that, okay, now this, since there is a fair value gap here, so definitely price will use this fair value gap to push upward. No, this is a daily fair value gap. And don't forget, on a weekly time frame, we have what? We have a weekly fair value gap. Like I always said earlier, as like I said earlier, the weekly fair value gap is stronger than the daily because fair value gap on the higher time frames are stronger than the ones on the lower time frame. Let us mark out our daily fair value gap. Can you see? Now we have daily fair value gap. Then on the weekly, if you switch to the weekly, you will see this weekly fair value gap. Which one should price respect? Price will definitely respect the one on the higher time frame because this weekly fair value gap is stronger than the daily fair value gap. It is a strong magnet, okay? So it's we definitely what magnetize price towards itself, okay? Because it is a strong magnet, it has stronger energy than the daily fair value gap. Now, does it now mean that price when this one does not have its own energy? Yes, it has its own energy. So what price will do is that price will come into this daily fair value gap, tap into it, and push up a bit. But the energy that this daily fair value gap exhibits or it has is not strong enough because we have a stronger fair value gap below it that has a stronger magnet that is pulling price towards itself seriously. Okay, so therefore we have to what respect this what this weekly fair value gap. Okay, now what most traders will do, inexperienced trader, what they will do is that they will trade off of this daily fair value gap, and they believe that okay, since there is a fair value gap here, it is this fair value gap that will now push price towards liquidity. They will what wait for price to come in, they will enter, then they will place their stop loss below this and place their target above this. And what will happen is that they don't have the experience that this weekly fair value gap is stronger. It is a strong magnet. It's magnetizing price towards itself. So this will be what disrespected. They don't have that. And what will happen is that they will what take some losses, right? Now look at it. Now what happened is that this daily fair value gap eventually pulled price towards itself. Can you see that? It put price towards itself, it magnetizes price towards itself because it has its own power, it has its own energy too. So when price came in on this black candle into the what? Into this daily fair value gap, what happened? It pushes price away upward. So those people, inexperienced trader now would have thought that okay, price is moving and it's going to what? Is going to what? Towards is going towards their target. But they don't know that. But you, as an ICT trader, that you understand the language of price. You know that there is a weekly fair value gap downward that is what? That is even stronger than the daily, that is pulling price towards itself. So you will not fall victim of this. So therefore, you will have to wait, okay, for price to pull down. Now look at what eventually will happen. Can you see? Whoa, price fell. So after this daily fair value gap pushed price up a bit, price fell down to what? To the weekly. So week fair value gaps on the higher time frame are usually stronger than the ones on the lower time frame. Okay, this has to be respected. Now, look at the trader that has placed an entry and has placed a stop loss, hoping that price will what ride up straight to the liquidity point, and price turned down to what to take him or her out of the market in huge loss, right? So can you see that experience is key and you need to understand the language of price. Okay, now let's take a look at this now. If you are trading, if you are trading down, right, you could have taken a trade off of this what bearish fair value gap and ride it down to the weekly, right? Because you wouldn't be waiting. So if you are not patient enough to wait for price to what to move down to this weekly fair value gap. Now, do you know that this bearish daily fair value gap is also a strong fair value gap? Yeah, it is, because it disrespected this bullish daily fair value gap here. Now let's spot it out. Look at it. We have now this daily bullish fair value gap was actually meant to push price up, but because it is a weak fair value gap. Why is it a weak fair value gap? Because we have a stronger fair value gap down. So price eventually reversed and formed um, daily bearish fair value gap. Okay, this daily fair value gap has disrespected this bullish daily fair value gap. So therefore, this bullish fair value gap is now a weak fair value gap. This is a strong fair value gap. Now you could have taken trade off of this daily fair value gap, okay, and ride it into the weekly fair value gap. Now, if you have taken trade here and ride it into the weekly fair value gap, that would have given you like 85 pips. Yes, that is around 85 pips. Okay, but notwithstanding, this is just a short trade. Okay, but our real move is what when price gets into this weekly fair value gap, we want to what take a long trade to what to this liquidity point, which this is the real movement, okay, that we are expecting. Okay, now let's take a look at what would have happened. So we are expecting that when price comes into this weekly fair value gap, they will now look out for our entry. So when you look out for your entry, then when there is an entry, then you take your trade and place your stop loss, then you ride it to the what? To this liquidity point, because liquidity is money, price is chasing money. So then let's take a look at what would have happened again. And finally, price came down into the weekly fair value gap, and weekly fair value gap pushed price away to our liquidity point. Okay, this weekly fair value gap is stronger than what this daily bullish fair value gap. We have two bullish fair value gaps, the one on the higher time frame and the one on the lower time frame. The one on the higher time frame is stronger than the one on the lower time frame. You need to understand that if you want to be profitable. Can you see that? So that is how to trade. So a strong fair value gap, a fair value gap on the higher time frames are stronger than the ones on the lower time frame. Okay, so our next what I will be discussing next is going to be what fair value gap that is overlapping with another PD array is a strong fair value gap. So I will be explaining this to you in my next video, and kindly subscribe to this YouTube channel so that as soon as it comes out in few days time, you will be the first to watch it. All right, thank you, AJS.